Alright, traders. Hope everyone's had a good weekend. We are back at it. Now, this week we talked about last week being pretty pivotal in terms of setting new trends or whether the US dollar is going to be able to hold its gains. Now, at the moment, there is a little bit of weakness of the US dollar coming through at the start of the European session. Now, keep an eye on this because this is important. If we can't make new highs in the dollar yen, then the sellers of the dollar yen, which are many, will start to look for excuses to push it down. And the euro dollar buyers, of which there are many, will start to look to regain 112 and start pushing higher again. And the US dollar will be back to not so much the Fed, but the market being right, and the market trying to sort of play its dominance in the game and trying to force a change there in the Fed to delaying, being more concerned about the weakness in some of the data, especially the housing data on Friday and the weak inflation numbers. Alright, so there is definitely the ability for the market to fade this US dollar rally before it's really even begun. And the US dollar rally was a half on the fact that the market was really low. So dollar yen was at new lows going into the FOMC, and when the hawkishness came out, it reversed and then short squeezed a little higher. But the reason why dollar yen was so low in the last couple of weeks can still remain, and the yields remaining stubbornly low. And so the bond market's not believing that the Fed's going to be raising again. Therefore, the dollar yen might start to reflect that. And if they want to play the game of euro going to be tapering sooner than later, then they can start to price that in before Draghi announces his plans in December or September. And also in regards to the pound part of that game too. The pound's been going sideways, consolidating since the big sell-off post-Brexit, post the UK election. And as we go into the Brexit, the argument can be made that the negative Brexit headlines will come a couple of weeks after the Brexit negotiations start, not at the beginning. At the beginning, at least everyone should be cordial and nice to each other. And that could last for a little while. And then when things fall apart, you can start to see the leaks from each side and the attempts to sway public opinion one way or the other. But to do that at the start's pretty cynical, and I don't think that you'll get the headline that you're looking for to sell the pound. And therefore the path of least resistance is probably higher on the back of the Bank of England, where they surprise 5-3 split last week is indicative that maybe the market's wrong on the timing of the next rate hike, and just generally how the central bank there views the UK economy, and the concerns about inflation might be gaining in strength compared to some of the less concern there from, say, the head there, Carney. Now, Carney's speech from last week's going to be released tomorrow. I don't know. I'm going to have to check the timing of that, whether that was... I think that was... I mean, of course he can make some changes to it, but I think that was... He was planned to make that speech, I think, before the Bank of England meeting. So I'll double check that tomorrow before the stream. I don't want to be caught wrong-footed on that one. If it's after, then it's very interesting to see if he can, how he downplays inflation. I mean, in both scenarios, he's probably going to be downplaying inflation concerns because they've got that hot inflation number, and most of it's due to the low sterling and not to wage inflation, which is what all central bankers want. All right. In terms of news that's come out in the Asian session, pretty quiet, but we did have some news at the end of the Asian session regarding Australian banks. Now, this had the effect of sending the Aussie dollar to day lows, but we've rebounded pretty quickly, and it's there's two schools of thoughts here. In general, the Aussie is on a buy the dip along with the Kiwi and the CAD. So the CAD and Kiwi and Aussie are all the strongest pairs last week, and that rally can continue regardless of the news, which could just provide better buying levels. And that maybe the buying's not over yet, right? And we can get to 77, which is a much bigger sort of resistance level. That sort of news, though, is going to be hard for the stock market to ignore. So we've done a trade here where I've sold the ASX. Now, reason why you'd sell ASX, and it's relatively okay, is that in terms of the weightings, the big four banks, which are all downgraded because of housing concern, the outlook here in Australia, the big four banks have like a 50% weighting in our stock market. So it's huge in terms of everything else, and the potential for it to be dragged lower is quite real, and quite real. And if you're looking at the price action, it's in a bit of a downtrend. Had some major selling into that last little rally, and it wouldn't take much here to roll over to the negative side as well. So targeting the February lows here around about 550 would be enough. And this is futures pricing as well. So if you're looking at yours and you see it, about 50 points higher, then you're looking at the cash market equivalent, which with the broker you're trading with. So I'm looking to sell here, got my stop above those previous highs, has to really break it back above. Now it can do that. Now why can it do that? Because banks have been heavily hit already. So perhaps it's priced in, it could rally. If tomorrow at the open it rallies, then I might actually cut this before it gets stopped, because the price action should be pretty weak at the beginning. And then depending whether banks can bounce is whether I cut or let it run. So banks in general have support on dips in Australia, just the stock market, and we've been sold so aggressively since the government here announced a bank tax. But it's negative news in general, and it could start to highlight the housing concerns we do have here in Australia, and what happens when you start to raise rates here. Are banks going to be alright if the defaults increase? And the answer is probably not. No boom has gone for 26 years before. We've just broke the record in recorded economic history, and I don't know how it's going to end, but generally it doesn't end pretty. So we'll see. We'll see how it plays out in the next 6 months, but it's a bit of a warning sign, yeah? A bit of a warning sign. So what pairs are in play? Well, pound is the most obvious one here, coming up against some major resistance. Now, in the beginning of this, I talked about wanting to express some long here. If you're not in already, then it's a bit late to chase, but it's not the worst trade. So say you want to look to buy the pound here for the break higher. Boris Johnson came out with some half supportive comments, and the market is generally building up here, it looks like. So stops above look pretty perilous. Doesn't mean it's for sure, but it's not the worst trade you can make. And then if the market somehow reverses here on a negative headline, we get stopped out. But we were targeting probably 129 something on this sort of move higher, and you can see that if we do break high, it's going to look nice on the charts, and more buyers should come in. But just keep an eye on it, what happens at the end. If I can't break 128.10 in the next couple hours, then I might just cut for small loss, depending on how it unfolds going into the US session. But yeah, no, it looks pretty clean. I understand why it can rally too, given the lack of negative headlines people are probably expecting, and if they don't materialize, you got the nice squeeze happening. Let's have a look at review some of the weekend research from banks, just so we don't miss anything. It's a pretty light data week. I think the RBNZ is the biggest thing that we can look forward to. Yeah, that's the biggest thing for me anyway. You've got some flash PMIs from Europe. Nothing too crazy. But yeah, probably the RBNZ meeting is going to be the biggest event. And that's got its own game, right? The RBNZ has been talking down the Kiwi every meeting for a while now, and whether they continue is whether the market continues to listen to them is probably the question that you need to be asking yourself if you're a long Kiwi trader. And what I would be doing is using any dip to as an opportunity to buy, and then test the market's strength, the uptrend strength. Where's the Kiwi, so we can have a little look at that. So the Kiwi's been bought on dips. We tested 73, a little bit high for it. And you can expect RBNZ to be a slightly negative event. And so if it does dip down, use it to buy, depending on what they say. Now, if they don't say anything, or if they turn a little bit neutral to hawkish, then the Kiwi's gone. It's gone to 74, 75 quite easily, without really changing too much in the rest of the markets. That will put Aussie Kiwi though under pressure, and Aussie Kiwi was already failing to hold that rally above 105, so looking pretty dodgy anyway. And so that would bring the Aussie Kiwi back towards lows of 103.60, 103.40 if there's some neutral to hawkish statement from the RBNZ. If we can break these levels, then we're targeting the parity level which held last time and produced a 1400 point rally. It's never broken parity since the floats. So in the 30 years these countries have had the currencies freely traded, we've never broken parity against each other. And that brings up some questions, right, about long-term valuations and whether we can buy things at ridiculous prices and then buy and hold with little to low leverage and eventually turn out right. I mean, it's pretty hard to go wrong if you buy it at all-time lows and hold it long enough in countries which are so closely related. It's sort of like selling euro pound at parity, right? You're probably going to be okay if you come back in a year or 2 years later. But when we get there at the time, it's going to be a little bit scary. So we'll see. We talked a lot about that trade last year, getting the opportunity to buy at parity if we did. Now we really might get that opportunity if the RBNZ turns quicker than the RBA. And the RBA's got a different set of problems to New Zealand. Alright, so that's the wrap today so far this morning. Hope everyone's well and not getting into too much trouble. So just quickly, you got the... I'll look at some of the research that we don't usually look at today. Just give a spread, give it a fair bit of... spread out the love. So Lloyd's Bank, jeez. Lloyd's Bank's the bank from that movie, right? The Hong Kong trader getting into trouble. Oh jeez, what's his name? Off the top of my head, I miss it. So yeah, there is on that note, there is a lot of hawkish speakers coming out now. Kashkari was out on Friday and Saturday saying that, people out there got sympathy with his view. Now, Kashkari was the guy who dissented in the rate hike last week, and so if there are people who are a bit more dovish, you probably hear from them. Leeson, that's right. Yeah, that's a good movie. Alright, so got an EU Leaders Summit later, and PMA is expected to give a short speech on Friday at the summit. I bet you she comes across hopeful and conciliatory, not aggressive. Alright, last week's surprise vote, our bias after seeing the 130 region held is for a move back towards 125, okay. A run back through 28, 40 would delay, suggest another retest of the top side, okay. Yeah, Euro is really quiet right now. The bears must be really disappointed in the lack of follow through. And so, easy enough if the US dollar was to sort of catch that selling bias it had for a few weeks, that the Euro could turn up again. Don't think it's really time just yet to start pushing the Euro higher. I haven't got that really clutch piece of data. In terms of the dollar, the market hasn't really turned on the dollar yet, but seems to be in play. Well, it seems to be holding anyway, right? If you're a seller, who's more patient, the sellers or the buyers? Yeah. And Euro Pound's another interesting one. It's going sideways a little bit at very high levels, and it doesn't usually do that. It will probably start to roll down with a pound rally if it doesn't extend soon. And so, in terms of entries, ooh, missed it a little bit. Ooh, jeez, we should have sold at 88. Jeez, we're soft, weren't we? Not selling up there. See, this is another way that the pound also gets support, is from the Euro Pound selling. And it looks like pound's about to break the 120. Yeah, it's happening now. So time to make some monies, boys. Time to make some monies. Singapore, not Hong Kong. Are you sure, Erebus? Pretty sure that it was Hong Kong in the movie. 90% sure. Let us quickly check. Nick Leeson. Barings Bank, not Lloyd's. Or Lloyd's buy it. Jeez. Thinking they're all the same, man. So he was involved in, I mean, he was taking punts on both the Singapore and Tokyo stock exchanges. It was a Nikkei which killed him. But where was he actually trading out of? You're right. Looks like he was in Singapore. Yep. Don't know why I got the. For those who don't know what we're talking about here.
I know you're keen to get out of the back office and onto the trading floor. We need someone to go out there and sort things out. I thought that someone might be Nick Leeson.
Oh! That's what I love about Asia. Anyone can make it. It doesn't matter which stupid school you went to.
I just made 2,000 quid.
You number one, London.
One of our traders in Singapore got drunk the other night and pulled a moon.
What did you say?
He exposed his bottom.
We couldn't go on running bearings like a gentleman's club. We had to look beyond our traditional recruiting grounds to seek out a hungrier breed.
That's very good, Nick.
I hear bearings have almost cornered the market over here, thanks to you.
We've got to start. The man is single-handedly generating a fifth of the group's worldwide operating profits. We are going to make so much money.
Are you enjoying yourself, Nick?
Yes, it's all right.
True what they say about your gonads, isn't it, eh?
He doesn't do things by the book, Ron.
You can't run a modern financial centre with a bunch of hooray Henrys. We need another £2 million profit to secure our bonuses.
Ron, what planet do you live on, mate?
Think about Nick, and perhaps come up with ideas to follow his footsteps.
Just worked out the balance in the AIDS account. The losses are over $10 million.
Keep your voice down. Everything will be all right as long as we balance the books by the end of the month.
Gamble.
That's all the market is. One giant casino.
Those losses are getting out of control. What's bothering me is where you got all the money to actually pay us, okay, in the first place. We've got an unauthorized position.
They want to check on these numbers, iron out these funding problems once and for all.
I, Nicholas Leeson, have lost 50 million quid in one day!
Yeah, no, it's pretty good. I mean, it looks pretty old there, but it's still pretty interesting. That is Andrew. That's Andrew. Andrew was part of that. He was in one of the scrummages. Keep an eye on the pound, though. It does have a lot of false breaks in general, so just don't just take for granted it's going to kick on. But it's looking pretty nice as we go into this stream so far. In terms of those commodity currencies and talking about the strength of them, you'll see here in this Charts That Matter from Goldman Sachs, they just release charts every now and again. Yeah, but one of the charts that's interesting is the percentage change this week and last week, and what you look at there is ones who are strong and then stronger. And so Aussie and Kiwi and CAD all did that. And these guys all move together usually. Well, they all get chucked in the same box. One which is flipping is the pound, and gold showing weaker and weaker. Alright, so it's the danger one. So it's obviously still searching for support, underperforming, and really erratic, isn't it? You know, remember just 2 weeks ago we were talking about that relentless strength in the gold, when there's no news. Now we've got relentless selling in the gold when there's no news, and it's must be doing traders head in a little bit, that rally up there, and then the selling here coming through. We'll see how it plays out as it gets a little bit lower. I suspect there will be some buying soon. It's a little dangerous to push lower here given the US dollar's precarious footing and that rally. So you could play it almost as the inverse of dollar yen. If dollar yen is to start to roll back down and euro go higher, then the gold should follow too. Yeah, it would help if stocks fell, but you don't need that 100%. Right, they're bullish on the euro. Sorry, on the Aussie dollar. Bullish on the euro Swiss. Bullish on euro CAD. Okay. With medium conviction. And they're bullish on which iron ore, so it makes sense for them if they're bullish on iron ore to be bullish on the Aussie. Iron ore's been under a lot of pressure. US stocks, we don't trade that. SP, no, don't trade that. Nikkei is going to struggle to go a lot higher if dollar yen struggles too, but Nikkei has been decoupling a little bit from dollar yen, so it's starting to do its own thing a little. And if dollar yen continues to range trade, then that's probably going to be the case. But I think if dollar yen breaks lower than 108, then it would be hard for the Nikkei to remain high. The reversal in Nasdaq got everyone's attention. I don't trade Nasdaq. You know, it's a little bit too wishy-washy for me to bubble and pop. But we'll see. And in terms of the US yields, you know, this is really important if you're trading dollar yen on US dollar in general. Those who are looking for the continuation of the yields to underperform, targeting the 2 rally, right? But 2%. But since the Fed, it has been, you know, jumped back straight up higher. If we can get back above 2.3, then we're talking about dollar yen going to 115 again. If we can't, then and it remains lower for longer, the market starts to price in that the Fed's going to be raising less than they suggest in later this year and next year. You remember some of the Fed members look for 4 rate hikes next year. If that gets to be delayed more and more by the market, then you know this continuation can continue. And if that gets 2.0, you're looking at dollar yen at 105. Euro 115, 116, easy. Alright. Brett Donnelly, we like to read his stuff. Well, I do anyway. You know, it's always interesting to me. The Icarian Kiwi. We used to look at this last year when we're talking about why is the Aussie going to rally? Aussie Kiwi. So he's pretty negative here on the Kiwi. The problem with the Kiwi, it's really hard to sell until it sells off and then it crushes low, right? So, you know, everyone can sell here expecting RBNZ to come out. That looks like a pretty simple trade, and the RBNZ effect may be waning, and, you know, there is pressure on them to sort of get their expectations up to reality. And half the reason rate differentials are so wide is because the RBNZ's been stubborn in suggesting that the next 2 years they're not going to be hiking rates, even though data's been improving. Now, you saw the dramatic change from the the BOC, the Bank of Canada, and the effect that had on the Canadian dollar. That same thing can happen here with the Kiwi this week on Thursday morning. So I don't know. You got to be careful. It's I suspect that the RBNZ will try and talk it down again. But if the Kiwi does not sell, or if the sell-off is shallow, then you'd probably be looking at a pretty dangerous situation here in terms of the next leg higher. So if we can't really hold below 72 after the RBNZ, then the top side looks vulnerable here. And while when they sell aggressively, you got to pick your timing right? You don't want to get stuck in a squeeze here. This is really the widow maker in the market. Now, that being said, I think, you know, those mathematical, statistical FX signal guys that come out and say this is really, really rare for there to be an extension after 5 weeks of the Kiwi. Always a sort of consolidation or pullback. So timing wise, it makes also sense to be looking for the sell, but it looks almost too simple. Yeah, it looks almost too easy. That's the part I'm concerned about. But I'm definitely not going to stop anyone trying to punt this lower. It's just let's be a little bit careful in not getting stuck in that one time where it doesn't go down. So, yeah, look, it's I think this is going to be a very popular trade. There's another reason why I'm worried about it going up. Everyone wants to sell this, so let's probably keep our powder dry if we can. I'm going to, right? Everyone else can go nuts. Yeah, you can go nuts and do what you do, but I'm going to keep my powder dry. Alright guys, that's probably enough for today. I've got a few more reports actually, but I might go look at them tomorrow with you. I don't want to give you too much information, but I think we've done the a nice little overview here today. The pound trade is the main trade, looking for US dollar weakness to come back in, signals for it from the dollar yen, that leads the euro higher, but the pound looks the simplest trade to the top side. And then we got the ASX to the downside on those banking issues tomorrow during the Asian session. Alright, best of luck guys. Yeah, if it's the most shorted position as well, AHFX, mate, that's another reason not to sell. 100%. 100%. Some of the worst traders I know are selling the Kiwi right now. And it's, if you trade opposite them, you do well a lot of the time. They got the stops at 73.50. Yeah, why don't we just sell one last little stretch higher? Yeah. If we let it go through the keeper, if it keeps on going squeezing, then we'll get out. When everyone starts targeting 80, we start selling. Alright guys, good luck with your trades. I'll be back tomorrow same time.